Hey guys, cutting right to the chase. AVGO is getting the snot beat out of it after hours. What's this going to mean to the chip stocks? Is the chip hitting the fan? What's it going to be to NVIDIA tomorrow when we wake up? Because AVGO, Broadcom's getting whacked up pretty hard. Let's take a look at the chart. What's happening on the chart? Well, as you can see, we closed up here about the 152 area, 153, and then we basically fell about 7.6%. Now, that 7.6% is about, what you would expect, plus or minus 10% after earnings. But what's it going to mean to the other chip stocks? Great story, because Broadcom was one of the leaders. And so let's take a look at the daily chart on the right, weekly chart on the left, and notice that 141.42, the low of the after hours, is just slightly above the 134 mark, which is the 134 is the 200-day moving average. We break out of that. We've got this swing low down here about the 128.60 area, which could lead us further down. What are some of the things that we see on this chart that are telling us that, just stand by, because this is not looking very pretty? Well, a couple of them are, first, we had a rally attempt on a weekly chart, came up, fell short. Negative divergence, as it was basically getting up close to the past highs, and now we've run down, and now we're breaking down below this support here. We're going to tag the 141 area, and if we break the 200-day moving average, watch out below. Where could we go? Possibly as low as, back down to this past support, about the 121.87 level. So not a huge, that's about a 12% mark down to the downside. However, it basically is making a case that these chip stocks continue to weaken. And the people are net sellers of these stocks right now, as we see with the stock we're going to be taking a look at next, which is NVIDIA. And NVIDIA was starting to kind of, look like it was trying to perhaps put in a little bit of a bottom. But I'm sitting there going, I don't think we're going to make it. NVDA. So what can we expect from NVDA? Well, one, we have a critical juncture here coming up with this uptrend line that's been in place for about 2.5 plus years. And if we break on that and break down, watch for a drop down to about $92 or maybe even 88.41, which is the 200-day moving average. Notice that similar type of not candlesticks, but price patterns ran up, made a new high on declining momentum. Look at that negative divergence on the momentum. Then we ran up rally attempt that has now failed on a weekly chart. And so stand by for it to basically, we break the structure of that uptrend line, then stand by, because we're probably going to take out, or at least get down to the 88.41 level. And it does have a significant level of support here where it broke out of before. That's where the buyers were coming in last time. And that corresponds to a level of about $76.36. So those are places to mark. I would put alerts, slightly above those levels, and then just stand by, wait for our momentum to shift, because, right now the momentum hasn't shifted yet. And that's one of the other things I would do, is draw a line across these momentum tops, especially on the TSI, and also we could do one on the RSI. And until that trend line on the momentum is broken to the upside, our momentum is basically going to be weak and heading down. So one of the things I want to talk about today is it time to shift your attention over to the concept of the leveraged inverse ETFs? The market is cooling off. We still have a long way to go till we get to the middle of October. We know the first week in September has just been an absolute bloodbath, and it's going to continue to be that way. We will see whether it is or not. We'll see if it is going to be that or not. One of the things I want to keep my eye on is what's happening with the momentum. So a couple of the leverage ETFs that I'm looking at right now, and see if they make sense to you. The NASDAQ Qs. Qs look as if they are going to continue falling. Notice that the similar type pattern that we see on the chip stocks, they rally to a new high on a lower momentum, okay, negative divergence on the momentum, rally back up, fail, and then it's falling back down on a weekly chart. My momentum indicator, TSI, is still pointing down. How far down? We're going to see. I like the Qs down here off of this line here. However, what happens if I want to be trading the inverse of this? Does it make sense to do that? And what could we expect? Notice that I'll go off the weekly chart here. Notice we just reversed here a couple of weeks ago, came up, put in bounced off the downtrend line, so that's the structure, and then came back down, put in a higher low on SQQQ, and now we're closing back above the 8-week moving average. So from the 8-week moving average back up to the downtrend line is about 12%, and if we take out this past high, it's about 28%. Now, on the leverage inverse ETFs, I do not look, to be basically, as you can see from the patterns, the markets have typically always, been going up a lot. And so what I look at on the leverage inverse ETF is just to be in them for a very short period of time. And I'll even take just a half of a full position on that. But it still gets some really nice move. The move that we did back in July of last year, that run there was about 42%. And so I don't get greedy. I'll take, 15, 20% as I'm waiting. And I just use this as I'm waiting for the non-leverage or the leverage bullish ETF to pull back into shape and the momentum to be ready to rock and roll to the upside. So that's one. The other one that looked really interesting to me is the one for the financials. Absolutely fantastic. Check this out from last week, the financials. We had a kind of a spinning type doji. Then this week we are getting a bearish engulfing of all these days over here. It looks like we're going to close below the 8-day moving average on XLF. So does that give us a trigger to potentially trade the not FAS, but FAZ? That's Foxtrot Alpha Zebra, or that Zulu. Zulu, yeah, I think is what it is. It's been a long time. So this is falling back down. Where do I expect it to fall? Probably back to these past highs over here. That would be a logical place. And so that's dropping, probably would say about 10+% from where it's at right now. Let's get an idea. And remember, I still have my stock that, believe it or not, even with the crappy market, I found a stock that it's going to blow your mind, but I think you're going to like it. We've been waiting on this one for a while. So, about 2+%. So the leverage ETF I'm looking at is FAZ. And what you're seeing with FAZ is a turnaround from the other side. Excuse me. And if it ran all the way back up to there, how much that would be? I've got it breaking above the 8-day moving average. So I'm just going to go ahead and draw up. So that would be about a 32% move all the way back up to there. I can basically also lay in a trend line here. Because what you'll find with these leverage inverse ETF is they move really fast. And so it may only get back up to that level, or the 100% move that corresponds with this move from here to here is this one right here. From where I'm at right now, that would be about a 21% gain. So that would be a reasonable gain on that. And from where I'm at right now, I could carry about a little bit, probably a 5% stop loss, or half position and put the stop loss below that swing low right there. So that's what we've got on the leverage ETFs. And I tell you what, if you find this information valuable, what we're sharing with you, and it's helping you navigate the market a little bit better, make sure that hit the subscribe button and tap the notification bell so you'll be updated the next time I post a video, which will be Saturday this week. So the stock that I've been waiting for, and I think maybe you have also, is one thing that's very interesting about this stock is that it tends to oftentimes be a contrarian type stock. When the market's going down, this one is oftentimes going up. You can go back and check the history on it, but it's Tesla. And so now Tesla continues to be a really, hot stock. It is a hot AI stock along with its EV, but we know that, Elon Musk has Tesla's fingers in a lot of different pies out there. So Tesla is breaking structure on this little flag right here, and it's breaking out, and I've got crosses on my momentum, both on my, as you can see here, both on my PSI and my RSI has turned to the upside. But also what makes me kind of bullish on this is that we're also getting the cross up on the weekly charts. There's a cross there, and as you can see, it's starting to cross up, move back up on RISI. How do I want to trade this? Well, a couple of different ways. This is a gap up. So the gap in between there is a strong level of support. Let me blow that up a little bit and also just put my glasses on. Had an eye operation on Tuesday this week. I had a cataract taken out, and oh my goodness, what a blessing, and how much better I'm able to see. So I would say, anywhere I could be buying this anywhere from 222, or I may want to wait until the 8-day moving average is back up to about 220.51. So somewhere around there. And then if it gaps down or breaks below the 8-day moving average or below this low right here, that would be my signal to get out. So if I pick it up at, hold on. So if I pick it up about there, and yeah, it'd be about a 5.5, almost 6% stop loss. Taking it out if I basically put my stop just below the low of that candlestick from yesterday. So it looks like a nice move up. Notice one thing though that I will throw out there is that this high here is basically pretty much right on the nose of this high right here. So price action's got all the way up into there. And that's just the condition of the market these days. It's just a condition of the market. If we break out above that, then we're probably looking at the downtrend line, which is going to be probably 164-ish, all the way up to the past high of 271. So I know I've seen a lot of people calling for the prices to move up to about 270. And so that would confirm that. So that wraps it up. Broadcom earnings could signal that NVIDIA is in trouble too. Gave you a couple of opportunities on the leverage inverse ETFs. Again, I don't hold on to those leverage ETFs for very long. It's basically a number of days. I'm looking typically to get out of those within 5 to 10 trading days. And then Tesla. So, hey, if you found today's video helpful, you'll definitely enjoy the video that's going to pop up here shortly. And it's going to basically provide you some information about some of the other entities that we've been watching. So, aloha. God bless everybody.